In today's session, we will be working out a numerical on the preparation of cash budget. The question goes like this. A company is expected to have 32,000 cash in hand on 1st April 2020. It requests you to prepare cash budget for 3 months, April to June 2020. The following information is supplied to you. And they've given us some projections. The projections is for February until June. The projections covers sales, purchase, wages, expenses. Using these pieces of information, we will have to go about preparing the cash budget. Now, let's just quickly look at the pieces of information that is given to us. We have sales. Sales, we know it is a receipt. So in the cash budget, this will fit into the receipt. Then you have purchase. Purchase would be fitting into cash payment. Wages, expenses, these two are again fitting into the cash payment. Along with this, they have given us some additional information. The additional information goes like this. The period of credit allowed by suppliers is 2 months. The period of credit allowed by suppliers. So our suppliers are giving us a credit period of 2 months. What does this mean? This means whenever we carry out a purchase, the purchase would be settled after 2 months. So here's the deal. If you carry out a purchase in Jan's purchases amount you would be settling in after 2 months. So that would be February, March. March is when you would be settling the payment. So period of credit allowed by suppliers is 2 months. Next point, 25% of sales is for cash and the period of credit allowed to customers for credit sales is 1 month. What does this mean? Whenever you carry out a sale, 25% of that sale is for cash, which means you will be settling the cash immediately. So here's an example. If you sell goods for 100 rupees, 25 rupees, your customer would be handing it over to you immediately. The remaining 75%, they would be handing it over to you after 1 month. So if you were to carry out 100 rupees sales in Jan, 25 rupees would be paid in Jan, the remaining 75 rupees would be paid in February. Delay in payment of wages and expenses is 1 month. So there is 1 month delay when it comes to payment of wages, when it comes to payment of expenses. So 1 month there is a delay. Next point is that income tax is to be paid in June 2020. It is to be paid in 2020. So 28,000 you have to pay in June 2020. So this is what is covered in this question. So now let's go about with the preparation of cash budget for this particular question. Now that we have the format of the cash budget ready, let's go about filling in. As a thumb rule, always remember, it is always advisable for you to fill out the headers of the particulars at first, and then you go about with the preparation of the cash budget. Now let's go back to the question and let us see what are the transactions that results in the cash receipts. So we have, at first we have sale. So sale is a transaction that results in cash receipt. So now sales, we have two parts. Okay, sales, we have two parts. We have a cash sale of 25%. Okay, so for every transaction, there is a cash sale. And remember, whenever you have the cash sale in place, it is for the current month. Next, what we have is we have sales, and which is the credit sales, and credit sales is for 75%. Okay, credit sale is for 75%. Now remember, cash sale is always for current month. cash sale is always for current month. So remember here, we are filling out the sale for April. So what is the sale for April? April sale is 96,000. Now we have to calculate 25% of 96,000. 25% of 96,000 is 24,000. Okay, so 25% of 96,000, the amount works out to be 24,000. So 24,000 is your cash sale for the month of April. Similarly, let's work out for May. So May, how much is your sale? May, your sale is 1 lakh. Your total sale is 1 lakh. Out of 1 lakh sale, what is the percentage which is cash? That is 25%. So 25% of 1 lakh, that is 25,000. Then you have 1 lakh 20,000. So 1 lakh 20,000 and 25% of this, that works out to be 30,000. Okay, that works out to be 30,000. So June months, 1,20,000, that works out to be 30,000. Now let's move on to the credit sale. Credit sale, remember for credit sale, there is a 1 month delay, or there is a 1 month credit period which is allowed to the customers. So which means in the month of April, which month's credit sale are you settling? In the month of April, which month's credit sale are you settling? You will be receiving the payment for the month of March. You will be receiving for the month of March. Now, March month sale is how much? That was 80,000. Now, out of 80,000, what is the proportion which is credit? Which is 75,000, which is 60,000. So, in the month of April, you would be collecting the payment for March month's credit sale, which is 75% of 80,000. Similarly, let's move on to May. May, you will be collecting the credit sale for the month of April. So month of April, how much was your sale? Your sale was 1 lakh. So 1 lakh's 75% is 75,000. Similarly,
it's 96,000, right?
Similarly, okay, a small correction in that. So in the month of May, we will be collecting the payment for April, and April's sale is 96,000, and 96,000's 75%. So that is 72,000. Similarly, in the month of June, we will be collecting the credit sale for the month of May. In the month of June, you will be collecting the credit sale for the month of May. So month of May, it is 1 lakh, and 75% of 1 lakh is 75,000. So we have completed that. Okay, we have completed that. Now we have to calculate the total cash receipts. Now, how do you calculate the total cash receipts? You just have to add up these two. You just have to add up these two. So I'm just going to quickly add that. Okay, I've got those months. So for each of these months, I'm just adding up the respective total cash receipts, and then just writing the total. Total cash available, we will be dealing with this particular computation a little later. Now we are moving on to cash payments. Now, which or what are the transactions that results or that works out to be cash payments for you? Okay, what are the transactions that results or that works out to be cash payments for you? So first one is purchase. Okay, first one is purchase. And remember, period of credit allowed by suppliers is 2 months. So your suppliers are giving you a credit time of 2 months. So in the month of April, please remember, you would be settling the purchase for the month of February. Okay, in the month of April, you will be settling the purchase for the month of February. So month of February, your purchase was 44,000. 44,000's purchase, you're settling when? You're settling in the month of April. Similarly here also, In the month of May, you would be settling the purchase for the month of March. Month of March, your purchase was 56,000. And likewise, in June, you will be settling the payment for month of April, and that is 60,000. So that has been completed. Now, what else is pending? Now we have to consider the other aspects. Now, what are the other transactions? We have wages. When it comes to wages, what is the condition? The condition is that there is a delay in 1 month. Okay? There is a delay by 1 month. So in the month of April, you would be settling the wages for the month of March. Month of March, your wages is 9,000. In the month of May, you would be settling the wages for April, which is 9,000. And in June, you would be settling the wages for the month of May, which is 11,000. Okay, so that has been completed. Next one, what we have is expenses.
Yes, but
Okay, I've just made a small correction with the wages for month of May, which was supposed to be 9,000, but I typed it earlier as 90,000. I just got that corrected. Okay, next one is expenses. Similar condition for expenses. Expenses is always settled in 1 month delay. So in the month of April, you're settling the expenses for the month of March. Month of March, that is 6,000. May, you're settling for April, which is 7,000. And June, you're settling for May, which is 9,000. Okay, so that has been completed. Any additional expenses we have apart from this? Yes, we do have income tax payment. Now, income tax payment, this is a one-time payment. Okay, this is a one-time payment, and which is only in June. So this is only in June, and in June you have to pay 28,000. You have to pay 28,000. Now let's go about with the total cash payment. So you just have to sum up all this together. You have to sum up all this together, all the cash payments together, and I've done that, and I've got the answer. Okay, I've got the answer for the cash payments. Now my cash budget is not complete because I have to do some more calculations. Now what I've been told, what I was told was on 1st of April, the cash in hand. The cash in hand is 32,000. What is this? What is the significance of this? This is nothing but your opening cash budget. This is nothing but your opening cash budget. Now we have to calculate the total cash available. How do we calculate total cash available? It is A plus B. What is A? A is your opening cash balance. What is B? B is your total cash receipts. If you do this, you will get your total cash available. So that will be 32,000 plus 84,000. 32,000 plus 84,000, which works out to be 1,16,000. Okay, this works out to be 1,16,000. Similarly, we have to calculate the closing cash balance. How do we calculate closing cash balance? That will be total cash available, okay, minus your cash payments. Okay, that minus your cash payment, which works out to be 57,000. This works out to be 57,000. So 57,000 is your closing cash balance for the month of April. Now, one important aspect which you must remember is that closing cash balance for the month of April will be your opening cash balance for the month of May. Opening cash balance for the month of April will be your opening cash balance for the month of May. So month of May, we have an opening cash balance, which is 57,000. Now we have to calculate the total cash available, which is 57,000 plus 97,000. That makes it 57,000. So we have to calculate the total cash available, 57,000 plus 97,000, which makes it 1,54,000. Now 1,54,000 is the total cash available in the month of May. now we have to calculate the closing cash balance. How do we calculate the closing cash balance? Closing cash balance would be 1,54,000 minus 72,000, which makes it 82,000. 82,000 is your closing cash balance for the month of May. So the closing cash balance for the month of May will be your opening cash balance for the month of June, which makes it 82,000. Okay, this makes it 82,000, and we have to calculate the total cash available. So 82,000 plus 1,05,000, which makes it 1,87,000. Likewise, we have to calculate the closing cash balance for the month of June. So that will be 1,87,000 minus 1,80,000, which makes it 97,000. So 79,000. 79,000 is your closing cash balance for the month of June. So we have prepared the cash budget for 3 months, starting all the way from April, May until June. And we have also estimated the cash balances at the end of each month. So this is how typically organizations will go about with the preparation of cash budget.